All right, as I noted in the comments section, there's a lot of moving parts in the market right now. So let's jump right in. We'll start with the stock market. Um, this doesn't look like a daily cycle low anymore to me. As of Friday, the 50-day moving average was right here. Actually, let me put that in. All right, so we potentially on Friday had a possibility that we had found a bottom right here on the 50-day moving average. And if that had been the case today, then I would have gone with the assumption that this was a stretched daily cycle low. But that's not what happened. And sentiment was already um, quite bearish, at least short term, right here. So that combination, 50-day moving average support, bearish sentiment. If it could have produced a rally and a swing, then I would have said, we just got a stretched daily cycle is all this is. But that's not what happened. We gapped down. We gapped down and through the yearly cycle trend line. So I'm going back with my original assumption that this was just, a daily cycle low, but probably one that maybe got terminated a little bit early as the Fed wanted the market near the highs in order to only cut 25 basis points. But I still think this is um, a daily cycle low. And that means we are only on day 12 of this daily cycle. So we should probably have 25 to maybe even 30 days. Maybe if this cycle shrinks a little bit, which I don't really anticipate, maybe 20 trading days. But this doesn't look like a daily cycle low at this point. This looks like we're in an intermediate decline, and it's threatening to become a waterfall decline. And after the market closed, things didn't improve any at all. The market's down another 1.26% in the aftermarket. And we're just coming very close to this intermediate cycle low right here. So this looks like an intermediate decline. It is a left translated intermediate decline, which greatly favors this ICL being taken out. And considering that we're still very early in this daily cycle, the odds are pretty high this is going to be taken out. I suspect that's going to cause some panic, and it's not out of the question. Yes, at some point we should get a bounce here. ICL should unfold as an ABC correction, so at some point, we should get a bounce, and then we get a second leg down. Maybe we get the bounce right here on this support zone. Maybe it comes in here at this even number 2700. I don't know, but breaking this opens the door to testing that. And as I've said before, this was a test of the 200-week moving average. Looked like a 4-year cycle low to me, but it was very early. We hadn't even reached the 3-year mark yet. So definitely a possibility that this could turn into a waterfall decline if we break this ICL, and the odds are good we are going to. Definitely a possibility that we can undercut this December low, and then we get our 4-year cycle low sometime this fall. And if we assume a normal duration daily cycle of 35 to 40 days, then we're going to be right out here somewhere around the FOMC meeting. And I think this is a necessary component in order to ignite the inflation that I'm anticipating over the next 5 or 6 years. If we break this, we come down and test this December low or make a lower low. Central banks everywhere and governments are going to panic. They're going to, visions of 2008 and 2009 are going to start popping into their heads again, and they're going to overreact, and they're going to, at least our Fed is going to start cutting rates aggressively. Rates are already at zero or lower in most of the other countries, so we could see a lot more QE from central banks around the world, and I think that's the trigger to ignite inflation in the coming years. Is if this market crashes, takes out the December low, central banks panic, and they overreact, then um, that's the trigger to start inflation. And I think our biggest problem today, anyway, was I believe China devalued the yuan, which basically just sends a signal that they are not going to deal with Trump. They're going to try and wait it out and hope that a Democrat gets elected during the next elections. So I think the market today realized that China just it isn't going to, first off, it probably isn't going to sign a deal, and if it does sign a deal, it isn't going to honor it. And at that point, I think the market just kind of gave up hope of a trade deal, for the next year, year and a half. And so I think we've kind of started what looks like could turn out to be a waterfall decline. So I don't think you want to try and pick a bottom in this. Right now, it's just way too early in this daily cycle, assuming as I am that this is a daily cycle low. This daily cycle is very young. You probably want to wait until we get out here by the FOMC meeting before you start trying to pick a bottom. And at this point, it's definitely a possibility that we could test this. So um, I would be waiting at least into the middle of September. And if we start to get anywhere near close to this, I wouldn't try and pick a bottom until we undercut it, assuming that we're going to print a true 4-year cycle low sometime this fall instead of at the end of last year. All right, looking at the CRB, I warned that this was a possibility. If the CRB broke this intermediate cycle low, then the same thing comes into play. This probably becomes a false 3-year cycle low, and the true 3-year cycle low occurs in deeper into the normal timing band sometime in the fall of this year, and we did. The CRB did break this today. So at this point, I've got to assume that this is going to break, and and we've got to make a lower low, and so that kind of, I think, probably negates trying to pick a bottom in oil, until stocks bottom. And like I said, we've got probably 20 to 30 more trading days before we're going to be due for the next cycle low in the stock market. So possibly the same thing here in the CRB. Probably not going to get a bottom until we come out here into September. So no good news here either. Now, let's move over to the currencies and gold. All right, so I'm looking at the dollar here. It looks to me like the Fed has engaged. China made it clear that they're going to they're going to devalue their currency and try and survive the trade war. So it looks to me like the Fed has been served notice, and they've got to get into the game. And looks like they have here today. This opens the possibility that maybe this intermediate cycle has left translated. I didn't think that was originally the case, simply because the intermediate euro cycle was still very young, only 10 weeks, and just didn't seem reasonable to me to have a 10-week intermediate cycle in the euro. But if the dollar left translates an intermediate cycle, it by necessity has to shorten a euro cycle at some point. So, if we're going to get a left translated intermediate dollar cycle, then we've got to have a short intermediate euro cycle. And so, this wasn't my expectation. I really wasn't even considering this as a possibility, but after today, I am. Um, I am. I am considering the possibility that this false breakout here in the dollar may have marked an intermediate top, and we're about to get um, 2 or more months of moving lower in the dollar. And if the dollar breaks below this pivot right here, that will confirm that we've got a left translated intermediate cycle in progress. And if that's the case, then this also turns out to be a 3-year cycle top. And now here's the problem with predicting the gold market. If I get the dollar cycle wrong, I'm probably going to get the gold cycle wrong. If the dollar is just dropping down into a daily cycle low, it's going to find a bottom here pretty soon, and then we're going to go back up and make a higher high. Well, then that opens the door for gold to go back down, and we get a top here pretty soon. Originally, I was thinking maybe the 50% Fibonacci zone at 14, whatever it was, 84 maybe, might stop the rally, but as you'll see here, we've already gone through that tonight, so that kind of comes out of the question. But if the dollar is getting ready to start a 2-month decline in a left translated intermediate cycle, that could mean that all we're going to get is a daily cycle pullback during the next gold correction, which like I said, we've already gone through 1484, so maybe the next correction comes at 1520. Everybody thinks that's an intermediate top, but maybe it just turns out to be a daily cycle top, and because the dollar is moving down into an intermediate cycle low, then we could go through 1520. So let me convert over to gold. All right. So the top here this evening has been at about 1486. So we're already trading through that Fibonacci level. The next major resistance is going to be at that 1500 to 1520 zone. And if the dollar continues to fall, I don't see any reason why gold should turn back down. And as long as the stock market is in a waterfall decline, again, I don't see any compelling reason to look for a top in the gold market. So, and also, I think I'd noted this in one of the past reports, we've got this kind of a halfway consolidation zone. We had a triangle going here for a while, and then it kind of blew apart with this weird move here. But this still does qualify, I think, as just a halfway consolidation. And if that's the case, maybe we have a T1 pattern sort of in play, and then in that, got about 170 points from here. Another 170 points puts us, past that 1520 to 1550 resistance zone and closer to $1,600. So not at all out of the question that we could get a second leg up that kind of matches this first leg, and gold maybe goes to closer to $1,600 before this intermediate cycle tops. And then if this is a T1 pattern, then we would assume it would come back down and test this consolidation zone during the next intermediate decline. So as I said, I think the way I'm going to play this, well, the way I am playing this with my portfolio, and I have a few friends that I'm managing their portfolio. What I did, let me convert over to the minor. All right. So I said in my second weekend report, this was the strategy I was going to offer as my best guess as how to play another leg higher was if the market could close above 2,800, or if it could gap above Friday's intraday high, which was at about 28.12, 28.11. A gap above that high was a signal to me that we probably were not going to come back down, retest. We might not even close the gap. And at that point, I think you could just buy. I don't even think you didn't really even need to wait for the close if we gapped above it. And that's exactly what we did this morning. We gapped above Friday's intraday high. So I bought immediately on the open um, with the expectation that GDX is going to test the baby bull highs. Let me widen the chart. All right, so here's our kind of our last resistance here around 28 to 50, something like that. We're a little bit above that right now, and at this point, it seems to me that these baby bull highs are going to probably act like a magnet and pull price up uh, and and test that before this intermediate cycle tops. And it's not out of the question that we could go above this if gold goes to 1600, and that is all going to depend on, in my opinion, on uh, what the dollar does. If the Fed has um, triggered an intermediate decline in the dollar, then we've got another daily cycle higher after this one. So um, we don't have just we may not just have another week or two in this intermediate rally. We may have another month or two in this rally if that's the case. So my expectation was is that GDX is going to test this. So I bought first thing in the morning on the open since we gapped above Friday's intraday high, and I'm going to hold this into or until we get a test. And at that point, I'm going to give up on trying to time tops. I'm going to buy um, leaps, 2021 leaps, probably one or two strikes in the money, maybe a very small position, one or two strikes out of the money. Um, and I'm going to buy leaps, 2021 leaps. So I've got a year and a half, and I'm just going to hold the things old turkey. I'm not going to worry about, there's going to be at least two intermediate declines during this period, and I'm not going to worry about trying to trade in and out of those leaps uh, at all, unless the one thing that would um, cause me to take profits. So let me switch over to silver. All right, here's the silver market. So as soon as we test the baby bull highs, I'm taking profits on my GDX position and just rolling everything into 2021 SLV leaps with the intention of just holding that for the next year and a half with the expectation that somewhere in that time, silver's probably going to test that $50 level, and I'm not going to worry about the two intermediate cycle lows that I'm going to have to hold through. I just want to get there. I want to get to $50 with my leaps, and I think that that's probably a reasonable target. As gold continues this 8-year cycle rally, I do believe gold and silver both will test their all-time highs before this 8-year cycle tops. So here's the one thing that would cause me to take profits on my silver leaps and then wait for some kind of pullback to re-enter. If we get an explosive move over the next month or two and we test this baby bull high in silver at about $21, that's the point at which I would take profit on the leaps. Presumably I would have a huge profit in that, and then I would get on the sidelines, wait for something that looks like an intermediate correction, and then I would, when we got it, I would try and re-enter leaps, and if I could get another 6 months on my leaps, maybe out to June, at that point I would do that. So that's my current strategy right now. A lot depends on whether or not I get the currency calls right. Um, I'm assuming this is just going to be a daily cycle decline in the dollar, but several people I know and respect have made the case that they think the Fed has um, entered the currency war and that they have generated an intermediate top. And it stands to reason if the dollar is, whenever does decide to roll over and start left translating intermediate cycles, basically once the 3-year cycle rolls over, then you've by definition you've got to have a short intermediate euro cycle. So um, there is a possibility that the euro completed a very short 10-week cycle and is now going to be rallying as the dollar starts its 3-year cycle decline. And if that's the case, then not at all out of the question that silver could get back up here and test the baby bull highs, and we may have a longer in this rally than what I was originally anticipating.